What's going on, everybody? This is the blockchain backer bringing you the latest cryptocurrency news and analysis. Today, we'll be taking a peek over here at the Bitcoin price chart. We'll poke around over there at the altcoin market. Got a couple of topics to touch on, as you should know. Probably been looking forward to it all week. Today is the last day of the week. It is Friday. If you remember last week, there was a lot of discussion out there about the White House having an executive order regarding cryptocurrencies to come out at some point this week. Well, it's Friday. We'll see if that ends up coming today. On a different note, I have confirmed that I will be on the YouTube channel On the Chain live this Sunday evening. I believe that's at 1 a.m. UTC time, 8 p.m. Eastern, 7 p.m. Central, 5 p.m. Pacific time, and that will be this Sunday, February 6th. So that'll be fun. Those live streams usually last about an hour. I'll be on there hanging out with those guys. I have no idea what we'll be talking about, but we'll we'll have something fun, I'm sure. So go subscribe to these guys. I'll post about it over there on Twitter when that's coming up there on Sunday. And then next week I will be live over there on BitBoy's YouTube channel as well. So a couple of new things coming out over the course of the next week. Those will be exciting. Otherwise, we have a pretty green day over here in the cryptocurrency market, a sight for sore eyes. I posted about this over there on Twitter within the last couple of days that we've been in extreme fear and we've been out of greed for the longest consecutive time period since the Fear and Greed Index was created. Our longest stretch, our newest record that we had set was back over here in May through July, and this was 76 days. So we're on like day 78, day 79. So if you're out there just feeling that pain and feeling the mental exhaustion, well, it's because you're in new territory. And mixed along with negative price action, the market knows how to torture us all with time. And yesterday we did have a negative move down in Bitcoin in here, which has now bounced back up this morning, but still not escaping the format that we've had going on here for the last 4 months. So in regards to Bitcoin's price chart, if you've been watching the videos over the course of the last several weeks and months, really, I won't dive too deep into this. We know where we're at. We're still just stuck in here, and whether or not this thing's going to revisit the low or give a couple more weeks of torture before finally giving us some type of retracement to come in. One thing that I noticed that was very interesting over here on the total altcoin market cap, excluding Ethereum. So this is going to be the market cap of the entire cryptocurrency market, excluding Ethereum and excluding Bitcoin. As we can see that this retracement that we've had in here was a 702 Fibonacci retracement of the entire move up we had from June through November. So we've done a standard retracement in here for the altcoin market. These are always interesting things when I spot these because you know we talk about 702 retracements so much on this channel. That also happens to occur at the exact moment where Bitcoin finds this low right in here based on this fractal we've been following for so long. So I think that's an optimistic thing to see. As we've talked about so many times throughout the history of the cryptocurrency market, whenever Bitcoin's top comes in or the retracement comes in, there tends to be a rise in the altcoin market. We've not seen some type of explosive rise for the whole market. We've monitored what happened to the top 100 coins or the top 50 coins from early 2021 till now, and that just a handful of them have really done much. But we know that when the cryptocurrency market takes off and has a true alt season, all boats rise together. We did not see that happen in here. And while we know that Ethereum's market cap and we know that Bitcoin's market cap have both hit 4.236 extensions, we can see that the altcoin market has not had the opportunity to do that yet. Now, I put together a video about a month ago, top hunting by calculating the altcoin market cap, saying that if we had a big fall come out here in Ethereum and a big fall come out of here for Bitcoin, what would it look like if we could calculate what the altcoin market cap could be if we saw a retracement back to approximately the 702 Fibonacci retracement for Bitcoin and for Ethereum? If we had the Bitcoin and the Ethereum dominance make another leg down to approximately 40%, to where if we saw something like what we saw happen back in 2017, where there was an initial run over there in the altcoin market, then after Bitcoin topped, there's a huge run in the remainder of the altcoin market, and that's represented by this dominance falling in here, and how we can see here in 2021 that we had a very similar move occur here, and then the same consolidation happening in this same area like we did back in 2017. What would happen if we had that big fall down in there, while at the same time these retraces came in for Bitcoin and for Ethereum? And that it would actually get this total altcoin market cap to actually get higher than where that would be at. It actually gets you up to about 2.35 trillion. So Something I'll be watching for if we get this move up in here is, of course, I'm going to be watching that like a hawk. But the mathematical calculations say somewhere up there in that region. So we'll be keeping an eye on both of those things if those do come. But what we know is that the total market cap of the entire cryptocurrency market, excluding Bitcoin, excluding Ethereum, have yet to have that reach out, while both Ethereum and Bitcoin have. Well, we're still waiting on this thing to give us another altcoin push in the market, which we can take that stuff off the screen. It just feels like it's just like waiting on pins and needles to eventually get the real trajectory going in the downward direction. And it's been a little while since we looked at the Ethereum dominance, and we talked about this quite a bit as Ethereum was up in here above 22% dominance, that this was the price level where the top of the Ethereum bull run came in at the early parts of 2018. And we can see how this dominance had broken down in here. And this was all after we were talking about it. So we knew this was a critical spot based on what happened in 2018. We can see the trend break and the newer low that did end up happening for Ethereum, with a little bit of a pullback going on right now. Even looking down here on RSIs, right? And here we are doing RSIs on dominance charts, but we can see how, we had a growing trend in here. And then eventually a big break came after reduced strength occurring. And that's what we see, right? So we can see actually even on the daily time frame right here, something we talked about in a video earlier this week is that relative strength getting to 60, right? And that's where we're at right now for the Ethereum dominance, right? It's just a hairline right below 60 over here. And typically in trend changes, that's going to be the area where things really struggle at, is right there in that 60 range. So still check marks for things looking okay over here for the altcoin market, with the Bitcoin and Ethereum dominance sitting at the same levels, Ethereum pulling back, not able to get through that 2018 level, and that altcoin market pulling back to this 702 Fibonacci retracement level in here at the precise same time that Bitcoin comes down and hits this level. All those things are very interesting to me, and that's what you call confluence in a market, where you can see multiple things all happen at the same time. You see Ethereum get knocked back from the level that was the problem in 2018. You see specific price levels hold on specific charts, where specific price levels also hold on different price charts, like we're talking about with a market cap of the entire altcoin market holding at that 702 at the precise same time that Bitcoin hits these levels. So those are interesting things of confluence happening within the market. And just for funsies, we'll do some wave counts over here and just kind of play around with it, right? So let's pretend that you say, hey, this is a wave 1, 2, big wave 3, 4, and 5. Then you come in here for your A, B, C correction. Where did wave B go to? Wave B as well goes back to the 702 Fibonacci retracement to end up going down for a leg further, pulling back to the 702. So what do you have? You have an A, B, C pulling to 702. I'll use an example of Bitcoin right in here so you guys can see that from the inverse perspective. What do we always talk about? We talk about how when Bitcoin's top came in and it hit a 702 Fibonacci retracement after doing an A, B, C. Invert it, pretend it's going the other way, right? So we can kind of get an idea, right? You get a big run up, you get an A, B, C back to 702, then prices continue moving in that direction after getting that 702 retracement, which is what you have happening here, right? You have an A, B, C correction back to 702. But before I lose anybody on that, understand we're looking at Bitcoin in the opposite direction, right? So when the pop of Bitcoin came and it ended up going much lower, right, what were we looking at? We were looking at an ABC direction going in the opposite way. So Bitcoin was falling, and then into its retracement upward, it went back to a 702 retracement and then reversed and went down. This is the opposite direction, right? This is the ABC direction going down. 5 waves up, 3 waves down. This is 5 waves down, 3 waves up. So this is what happens when a bubble pops. You go back into retracement and you continue lower. This is a grind up of 5 waves with 3 corrective waves pulling back down to the 702. Rather, with Bitcoin, it was 3 corrective waves going back up. So when you have ABC corrections and Elliott waves, and we're not going to dive too deep into it, you can see in Elliott waves, you have 1, 2, 3, 4, 5, and then ABC, and then you repeat the process, 1, 2, 3, 4, 5. So when looking at this circumstance right here that we have here, that's what it is, right? You have 5 waves to the upside and then an ABC correction back to the 702. That's what you would have in something like this, right? 1, 2, 3, 4, 5, ABC. Whereas what you wouldn't want to see is what you see over here on this side, where you have 5 waves down followed by an ABC back up, which is what we're talking about over here on Bitcoin when Bitcoin went into a bear market, is that the waves were to the down with the ABCs going back up. Instead, these are waves going up with the ABC pulling back for a corrective wave. So Interesting things to take a peek at. Again, I'm biased in believing that the altcoin market still will move up higher. That's what we saw happen back in 2018 once Bitcoin finally did go into its big retrace. We saw the big blow off tops come over there in the altcoin market. We also know that XRP historically has a bull run at the end of every bull run for Bitcoin, and we've yet to see that happen yet. So, unless we want to believe this time is different, I choose not to. But what we know is happening right now is that in 2018, this fractal was enough to exhaust the market. We have been following that here for Bitcoin. We also know that 702 Fibonacci retracements are enough to make people either throw in the towel when prices have moved to the downside, it's a capitulation level, and to the opposite side, it's also a FOMO level. That even in 2018, during Bitcoin's retracement, I was here during that exact moment and screaming like I typically do into the trading view chat rooms and all that stuff that, hey, we're at that retracement. And believe me, the sentiment of the market was not that it was going to roll over there. It was FOMO time for the market. And so that's one of those reasons why I talk about that when I think Bitcoin goes back in for this retracement, that, you're going to see doubt happening up here until we get up into these price levels, because that's what happened last time. Every time we get to a 702 retracement or into these retracement levels, the market gets convinced that the prices are going to break out significantly higher. And it happened in 2018 that people just like this got terrified by that big price fall that happened in Bitcoin. But once we went back into that retracement, the market got euphoric all over again. It's going to break out. We're going to go huge. And I keep saying, expect those $100,000 price predictions to come back. Expect that $200,000 stuff, that FOMO euphoric stuff, and mix in with it. If we get it right, altcoins popping off at that time. That's what happened in 2018. So if we see altcoins surging at the exact same time, it's just going to add to that narrative of excitement that Bitcoin's going to break out and go to 100K. But when you remove all those narratives and you're just looking at charts, and that's what I try to do, I try to just look at the charts. I say, we have a big fall, we go for a retracement. What typically happens at the retracement levels? Euphoria or panic and fear. And I know it's hard to look at it from this light, but when you get down to these retracement levels and you see a 702 retracement has been hit, while the market has just been emotionally and psychologically beaten down with a stick, those are good signs. You want to see those things at those retracement levels for exhaustion to happen. You want to see at the 702 retracement level that emotions and psychology are beaten down. And what you don't want to see is you don't want to see the retracement come back in for Bitcoin and emotions and psychology be euphoric again. Because if it comes back and it's euphoric all over again, we're getting just the polar opposite, right? You got prolonged extreme fear now at a 702 to the opposite way. If Bitcoin pulls back up and goes back up to that 702 and you see extreme greed and euphoria and 100K, 200K price predictions and everybody's YOLOing into Bitcoin again, we've seen this movie before. But the part of the movie that is missing that we have seen in this movie before is what comes after these moments right in here and as Bitcoin does go into a retrace. And that's for the altcoin market to have one more run. So lots of confluence out there in the market right now, which is optimistic to see Bitcoin has done this entire fractal that we've seen happen before. We've seen the total altcoin market cap, excluding Bitcoin and excluding Ethereum, pulling back to the 702 Fibonacci retracement with pretty clear waves in here of 1, 2, 3, 4, 5, followed by ABC, and even that B wave right in there pulled back to a 702. And at the same time, we have the standard crash retrace reaccumulation structure occurring over here on XRP right now, which we've talked about many times before, including over here on the Bitcoin price chart, that's what happened before it led off to its big bull run, is that we had a big crash, a retrace back to the 0.618 Fibonacci retracement level. That's exactly what we've had happen over here on XRP, and it's pulled back down here, right? Just like we had happen for Bitcoin. That's your typical run up, crash, retrace, reaccumulation, run up, crash, retrace, reaccumulation. And all of this is happening at the exact same time, getting back down to these price levels down in here as Bitcoin is in here and the total altcoin market cap gets back to the 702. And of course, for something like XRP to take off, we know that it's only taken off during other altcoin seasons. Are there any indications within the market that something like that could occur? We know that the Ethereum dominance has struggled to get back above the price level it was at, or the dominance level it was at back in 2018. We see that trend has broken. We see that strength has broken, and that the Bitcoin and Ethereum dominance are still setting up as they were back in 2018. In which this moment led to a big run in the altcoin market, excluding Bitcoin and excluding Ethereum, setting up for something similar while both Bitcoin and Ethereum have both reached 4.236 extensions on their market caps. And we know that it was into Bitcoin's retracement in here that led to the big alt season that happened back in 2018. We have yet to have that retracement occur. And we know that the Bitcoin plus Ethereum dominance are setting up in similar formats that they were prior to that retracement occurring back in 2018. So there's just tons of confluences everywhere. And it's hard to see it from that light when the market is like this, and we've now set a new world record for longest period of time in this extreme fear. But I'm happy to see that extreme fear happening where it's happening at. And I told you guys, if we got down here and it completed this thing, the bull horns would be turned on 100% for me. They are. I'm very happy to see the extreme fear. It's much easier to be optimistic when most of the market is feeling the same way. When most of the market is feeling excited and euphoric, it's time to watch out and feel danger because none of that money is sitting on the sidelines anymore. Everybody's in. We're going to reach exhaustion at some point, and there's not going to be any more money to throw into the market. But when prices have fallen back and everybody's scared and they're selling and they're out, well, all that money is sitting on the sidelines now, ready to jump back in. So when we see all of these confluences line up and that sentiment is pretty beaten down, it's a lot easier for me to be more optimistic out there. And I'm happy to see all the things that we see showing up on these charts right now. It's still just a patience game to wait and see how it's going to play out. But boy, there sure are a ton of confluences happening right now. And for that, I'm excited. I'm having to remain patient. I'm having to wait it out like everybody else, but I'm excited to see the things that I see. And if you're new to the channel and you're just like, man, I'm so beaten down from this extreme fear and this prolonged negative price action, you're like, how is this guy sitting here being bullish and optimistic during these time periods? That's just kind of how my channel always is that when the prices are low, I'm optimistic, I'm showing positive signs, I'm excited. And then, step back a couple of months ago, when everybody's excited, I'm over there posting, the charts of warning about Bitcoin and stuff. I'm typically on the opposite side of what the general masses are on. And surprisingly, that doesn't do that great for video clicks, right? Because what happens is a lot of people sell at lower prices. They want to be told the prices will be going lower because they want it to work out for whatever trade they made, right? So if people sold into panic, they want to know prices are going lower, I'm going to be able to buy lower. And then when prices are high, they want to know that, hey, I've bought high, but prices are going to keep going higher. So they'll seek whatever is emotionally making them feel better for whatever actions they have taken. And so I don't really feed that. I don't feed the extreme excitement when the prices get really high, and I don't feed the extreme fear when the prices get really low. I'm usually on the opposite side of all of it. And that's because I've learned the famous saying of buy low and sell high, but that's not what typically people do. People typically buy high prices expecting higher, and then they sell low prices expecting lower. And it's just a vicious cycle, as breaking a habit, right? Getting out of that cycle is incredibly difficult to do. It's why I talk about like emotional logs and everything and documenting what were your emotions like at certain phases. You can go back and you can review that and see, and be ruthless in those things, right? Write how excited you are at a time, or write how utterly terrified you are at a time. And then when you go back and you can review that again, you take a peek and you say, man, this is what my emotions were like, because we all have short-term memory loss. We all just have short-term memories. And we can kind of like reflect back and think, what was it like during those time periods? But like I even have my emotional logs from back in November and December of 2018. And that's when Bitcoin was crashing from $6,000 down to $3,000. Ethereum was tanking. You had the Ethereum ICOs. Remember, everybody was dumping all of their Ethereum from the ICO boom. It just so happened to be at the capitulation time. Narratives go crazy during time periods, and then emotions run crazy, and you're just in the middle of the storm. And when you document what it's like to be in the middle of these storms, or document what it's like when everybody's posting $100,000 Bitcoin price charts, right? And everybody's excited and euphoric. And you go back and you review these things and you say, what was I feeling like during that time? I think that's really the only way I was ever able to break out of that terrible habit of buying higher, hoping for higher, and selling lower, hoping for lower. So that's kind of one of those things I really try to share, because I think a lot of this game, yes, it is all this charting stuff. It's figuring out things. But the problem is we can do all these charts, but then we can kind of second guess ourselves based on what our emotions are. And it's not until we can really zone in and hone in on our emotions and understand how we feel at specific times to recognize the last time I felt this way, this is what ended up happening. And having it documented really helps. So, okay, that little speech went on a little bit too long. I'll start wrapping this thing up. Again, guys, I will be on the On the Chain podcast or the On the Chain show live stream this Sunday. I'll post about it over there on my Twitter as we get closer to it. Otherwise, I want to thank you so much for watching my channel. If you're looking for something to do throughout the weekend, of course, you could check out the course I put together where I deep dive into the previous Bitcoin bull runs, the previous altcoin market cycles, tying them all together, showing you how this market has worked in the past. It's a course that's just me looking at a lot of charts, talking about a lot of charts, and teaching you how to set up your own tools and indicators within TradingView and CoinTrader Pro. It's not like a PowerPoint presentation. It's structured very similar to my YouTube channel. I talk about my personal exit plans in here. I talk a lot about mathematics and percentages and why those are so important to me. And the most recent market update included in there was on January 31st, so just a couple of days ago. And you could check out all of this educational content over here on bcbacker.com. You can follow me over here on Twitter at bcbacker, and I want to thank you so much for watching my channel. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you could be notified of when I create new content and when I go live. As always, this is not investment advice, and I am not a financial advisor, but if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.